Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is July 15th, 2014. And as we get the week underway, the economic calendar is starting to spice up a little bit. So today at 10:30, we have a GDP number. It's a CPI number that's coming out. Now, it usually can move the markets. We'll look at the GDP. Some sell-off yesterday in the GDP. And then at 11 o'clock, we have a German ZWI number, which is an economic sentiment number, coming out at 11 o'clock. And then at 2:30, we have the U.S. number of retail sales, advanced retail sales on a monthly basis. So these things should really move the markets, even though it is summer trading. It has been moving the markets just idly. Looking at the Euro USD first, after Draghi speaking yesterday, the market was trading flat yesterday at 36, 136. We bounced about 36 pips, and then we sold right off. So really not a lot of volume in the Euro USD. Kind of get used to the fact that we are summer trading right now, so things are a little bit lighter. Looking at the GBP USD though, big sell-off yesterday in the GBP USD. As we can see from here, not a bad trade at all if you were able to catch it on the way down. Big sell-off, the past couple of days, breaking this level, and now we're really on its low. So considering what's coming out today from the GBP, especially with earlier comments this morning regarding their numbers, we should see some expected volatility. Maybe we'll bounce at these levels, or maybe we'll break even lower, but in any event, if you're fast on the keyboard and you could keep a tight stop, it might be a good decision to keep an eye on it today. Looking at the GBP Japanese yen, nothing, nada. Okay, not much of a sell-off, honestly. It's still very, very strong. So even though it's retraced a little bit, but it's still very, very strong considering what it's done over the past year. And on it finding its way on its upper range. So, it might be a good place to pick this up on the long side. Maybe they're just correlating it with the number coming out right now, as they sometimes do. Looking at gold, gold had a huge day yesterday on the downside, sold off by 30 points. I was lucky enough to get into this trade last week. Okay, I'm just trying to get to the right graph here. Right here. We were at 137, 142, 143 last Thursday. We just tanked yesterday. It was a big down day, about 30 points for the gold. Gold is sometimes very volatile, sometimes very difficult to trade. I had initially gotten short at 132, 133, and then built a position anticipating this drop on the downside. It was a great trade, but honestly speaking, I was lucky to a certain degree because it has been churning, has been trading sideways for a very long time, and I was able to catch this move down and really, I booked my profits at 13.06. That was the third balance of it, but I slowly paid myself. I slowly took positions, closing positions on the way down. So. I probably could have made much more money had I held it on, but this way, I saw that I booked myself, booked my profits. Because if it would have turned around here and would have gone higher, I would have been able to back all the money I would have made. So, pay yourself as you go along in the trade. It's always the safest bet. Now, looking at the Dow Jones on its dead highs again, gold goes down, the indices go up. Okay. Definitely a big correlation between the gold and the markets, and as we see, it's settling at 17,055. So this may be the point where we take it even higher, but again, like I said, there's got to be a real catalyst to make it higher, and there's got to be some volume to follow through in order to make sure that we do break higher. This is Razak at CM Trading. Have a great trading day, guys. Thanks.